My name is Richard Crosby. I'm a corporate partner in the financial institutions team here at Clifford Chance, and I'm delighted to be joined today by Cheng Yao, another corporate partner in the team. And we're going to be talking about what we've been seeing in the M&A market in the FIG sector. 2025 was a big year for M&A, with deal values up 40% globally year on year, and up 49% in the FIG sector alone, with just under $420 billion of deals. And at Clifford Chance, we were in the midst of that, and we were ranked by Merger Market as the #1 law firm globally for FIG M&A in 2025. So let's take a look back at 2025 first and what we saw as the key themes arising during the year. And perhaps I'll start with what we saw in the bank sector. A big feature was domestic consolidation across the UK, Italy, Spain, busy markets. We saw international banks continuing their program of non-core disposals. But what we started to see were banks using all the excess capital they'd built up during a number of years of high interest rates and starting to be prepared to use that on bigger deals. So that was good to see. We've been waiting for that for a while. But we also saw a bit of hostile M&A in certain markets, Italy and Spain and Germany, obvious ones, but also the increasing role and presence of private capital and how they changed deal dynamics in the sector. What about in the insurance sector? Were there different themes from your perspective?
So, as you were saying, Richard, it was a bumper year for FIG M&A, including in the insurance sector. So we had really big deals like Aviva's takeover of Direct Line, for example. But you touched on private capital. So that was definitely a theme in insurance M&A. So particularly in the life insurance side, we saw loads of potential acquisitions by private equity firms of life insurance entities, particularly in the BPA space. And that's private equity or private capital looking for expanding their AUM through life insurance acquisitions. And I guess the question also is, what was driving that? So why have we seen such a big increase? And I think a couple of reasons. There is obviously the private capital looking to enter into the insurance space. And we've seen a lot of focus from the regulator on the role that private capital is increasingly playing within insurance, both as a shareholder, but also as an asset manager, as well as a reinsurance. So that's also changed the dynamics and the market and the culture that you see in the life insurance space, making deals more feasible. So, Richard, do you think that's going to continue into 2026?
For domestic consolidation, yes, we do see that continuing. Banks are going to be looking at markets that they're comfortable in and domestic markets that they already know. It's lower risk and there's a lot of smaller players around, so lots of targets for people to look at. So yes, we think that'll continue. In terms of bigger restructurings and the sale of non-core businesses, some of that will continue and roll off. But because of these banks have been doing this for a while now, we think that should start to slow down. But I think the big factor that we do expect to see more of is banks sitting on their buffers of capital and being prepared to use that capital to do bigger deals. The issue with that is that buybacks have been going on for a number of years now for banks, and shareholders have got used to it. And if people are going to start spending money on deals, then those buybacks might not carry on. And so they're going to have to justify to shareholders why they're using money on deals like M&A deals other than share buybacks. So that'll be something to look forward to. So Jenny, do you think the same thing will apply in the insurance sector looking forward?
Yes, we do. So we expect there to be a continued interest by private capital in the insurance space, but maybe thinking about them by sectors. Starting with the BPA market in the UK, there have been such a lot of transactions last year, as I mentioned already, that the market is somewhat saturated now. And so we're starting to see there be more interest outside of the UK market into new longevity and annuity markets instead. So for example, the Netherlands, Germany, but also in Asia like Japan and South Korea. And I guess the part that we haven't really talked about yet and haven't seen as much of in 2025 is the specialist market. So Lloyd's transactions, and we saw the example of Zurich's potential takeover of Beazley. So that might be the start of a number of interesting transactions as people start to look at the Lloyd's and specialist market as well in insurance.